Chapter 1, Introduction. Chapter 1 of the $100 million order book is intended to provide an overview of the book, highlighting its importance as a detailed record of transactions and processes in the financial market. It also focuses on explaining the basics related to offers, laying a solid foundation for understanding the rest of the content. The chapter begins by emphasizing order book strength in the financial market context. It is presented as a fundamental instrument that tracks and records the transactions that take place in the different financial markets, such as the stock market, the foreign exchange market, and the bond market. The related chapter then goes on to explain the basics of offerings. The first emphasis is placed on the distinction between buying and selling. It is explained that bids are those in which investors express their willingness to acquire a financial asset at a given price, while bids are when investors express their intention to sell an asset at a given price. In addition, the chapter addresses the concept of price, which represents the value at which financial assets are being traded. The price is influenced by a number of factors, such as supply and demand, the perception of the asset's value, and macroeconomic conditions. The order book records the prices offered by buyers and sellers, allowing market participants to follow price fluctuations and trends. Volume is another key concept discussed in this chapter. It refers to the amount of financial assets being traded in a given offer. Volume is recorded in the order book along with price, allowing investors to analyze market availability and interest. Finally, the chapter addresses timing as an essential component in the order book. He highlights the importance of recording the time and data of offers, as this allows investors to follow the evolution of the market over time and identify relevant patterns or trends. In summary, Chapter 1 of the $100 million order book introduces the reader to the book's importance as a record of transactions and processes in the financial market. It lays out the basics related to orders, including buying, selling, price, volume, and timing, providing a solid foundation for understanding the subsequent content of the book. Chapter 2, Financial Market. Chapter 2 of the $100 million order book provides a comprehensive overview of financial markets and their culture in the global economy. It explores the different types of markets and the main players involved. The chapter begins by highlighting the importance of financial markets as a fundamental component of the global economy. He points out that the financial market plays a crucial role in the efficient allocation of resources, ease of investment, financing, and risk transfer. Furthermore, the chapter emphasizes that the financial market offers opportunities for economic growth and wealth creation. Next, the different types of existing markets are presented. The stock market is emphasizing that it is where investors buy and sell shares of companies, allowing partial ownership of a company and sharing in its profits. The foreign exchange market is discussed as the place where foreign currencies are traded, allowing the conversion of one currency into another. The bond market is explained as a market where investors buy and sell debt securities such as government bonds and corporate bonds. Later, the chapter focuses on the main financial market participants. Institutional investors are highlighted as organizations, such as pension funds, insurance companies, and mutual funds, that make large-scale investments on behalf of others. Brokerage houses are mentioned as custodians that facilitate transactions between buyers and sellers in financial markets. Individual traders are explained as independent investors who buy and sell financial assets for their own account. The chapter may also address other players, such as investment banks, which provide specialist financial services such as advisory on mergers and acquisitions and bond issuance. Other players, such as regulators and government bodies, can be mentioned to highlight their role in supervising and regulating the financial market. In summary, Chapter 2 of the $100 million bid book provides an overview of the financial market and its importance in the global economy. It explores the different types of markets such as the stock market, foreign exchange market, and bond market, highlighting their distinct features. Furthermore, it describes key market participants such as institutional investors, brokerages, and individual traders, showing the different perspectives and roles they play in the financial market. Chapter 3, Functioning of Offers. Chapter 3 of the $100 million order book focuses on providing a comprehensive breakdown of the order negotiation and execution process. It explores buy and sell orders and how they are matched in the order book. Furthermore, it discusses the different types of orders, such as market orders, limit orders, and stop orders. The chapter begins by describing the process of negotiating and executing orders. He explains that, when an investor decides to buy or sell a financial asset, he issues a buy order or a sell order. These orders are sent to the marketplace, where they are matched with other matching orders. Next, the chapter discusses buy and sell orders and how they are matched in the order book. It is explained that the order book is a record that shows all the buy and sell orders for a certain financial asset, along with their corresponding prices and volumes. Orders are arranged in the order book based on their prices, with the highest buy orders and lowest sell orders displayed at the top of the order book. When a buy order is private, it is matched to a lower sell order in the order book. Likewise, when a sell order is private, it is matched with the highest buy order in the order book. This is known as order matching, and it is an ongoing process that takes place in the marketplace. The chapter also explores the different types of orders that investors can issue. Market orders are explained as orders to buy or sell a financial asset immediately at the current market price. They execute quickly, but the execution price can vary from the originally expected price. Limit orders are considered as orders to buy or sell a financial asset at a specific price or better. These orders are placed in the order book and are only filled if the market price reaches or exceeds the specified price. In addition, the chapter discusses stop orders, which are conditional orders triggered when the market price reaches a predetermined level, known as the trigger price. When the trigger price is reached, the stop order is activated and becomes a market order to buy or sell the financial asset. In summary, Chapter 3 of the $100 million order book details how the offers work. It describes the process of trading and executing buy and sell orders, highlighting order matching in the order book. Furthermore, it discusses the different types of orders, such as market orders, limit orders, and stop orders, explaining the characteristics and conditions of each one. Chapter 4, Order Book Analysis. Chapter 4 of the $100 million order book is intended to introduce readers to order book analysis as a fundamental tool for understanding financial market dynamics. It explores important concepts such as liquidity, spread, depth of market, and other related order book statistics. The chapter begins by highlighting the importance of order book analysis for financial market participants. He emphasizes that the order book provides valuable information about the supply and demand of a financial asset, helping investors to make controlled decisions and identify trading opportunities. The chapter then explains the concept of liquidity. Liquidity refers to the ease with which a financial asset can be bought or sold without significantly affecting its price. Order book analysis allows traders to gauge the availability of an asset by looking at the number and size of buy and sell orders present in the order book. The spread is another concept discussed in this chapter. It refers to the difference between the bid and ask prices of a financial asset in the order book. Order book spread analysis helps investors understand the difference between the price they would pay to buy an asset and the price they would receive selling the same asset, reflecting market conditions and the availability of buyers and sellers. In addition, the chapter explores the notion of market depth. Market depth refers to the amount of volume available at different price levels in the order book. Analyzing market depth allows traders to identify support and resistance levels, as well as the willingness of market participants to buy or sell at different price levels. The chapter can also cover other statistics related to the order book, such as the total volume of orders in a given period, the order execution rate, and the distribution of orders in different price ranges. In summary, Chapter 4 of the $100 million order book introduces readers to order book analysis as an essential tool for understanding financial market dynamics. It explores key concepts such as liquidity, spread, and market depth that allow traders to assess trading conditions and opportunities. In addition, it discusses other statistics related to the order book that provide valuable information about the supply and demand of a financial asset. Chapter 5, Trading Strategies. Chapter 5 of the $100 million order book presents a variety of trading strategies based on information lost in the order book. It explores different common approaches such as scalping, arbitrage, momentum trading, and others. The chapter begins by highlighting the importance of having well-defined trading strategies when utilizing order book information. He emphasizes that careful analysis of the trends and patterns present in the book can help investors identify profitable opportunities. One of the strategies covered in the chapter is scalping. This approach involves taking quick and frequent trades, taking advantage of small price fluctuations. Scalpers often seek to profit from market liquidity by moving in and out of positions over short periods of time. Arbitrage is another strategy retained in the chapter. Arbitrage seeks to exploit price discrepancies between different markets or financial instruments. Arbitrage traders identify price differences and occur simultaneously to profit from this discrepancy, effectively eliminating risk. Momentum trading is another common approach mentioned. This strategy is based on the belief that financial assets that are rising or falling rapidly will continue to do so in the short term. Momentum traders look to spot these trends and get in position to take advantage of ongoing price movements. Other strategies can be tolerated in the chapter, such as day trading, which involves opening and closing conditions within the same day, and swing trading, which seeks to capture broader price movements that occur over longer time periods. The chapter can also address risk management considerations and trader psychology, underscoring the importance of having a trading plan, setting stop-loss limits, and maintaining emotional discipline when implementing trading strategies. In summary, Chapter 5 of the $100 million Order Book presents a variety of trading strategies realized in order book information. It explores common approaches such as scalping, arbitrage, momentum trading, and more. The chapter highlights the importance of having well-defined strategies, considering risk management and trader psychology when implementing these strategies. Chapter 6, Risks and Considerations. Chapter 6 of the $100 million Order Book is devoted to identifying the risks associated with trading based on the outstanding information in the order book. It explores factors such as volatility, illiquidity, and the impact of large orders on the market. The chapter begins by emphasizing the importance of understanding the trade-offs involved in the negotiation based on order book information. He emphasizes that while the order book can provide valuable insights, it is essential to be aware of the challenges and shocks that can arise during the negotiation. One of the risks discussed in the chapter is volatility. Volatility refers to the variation in the prices of financial assets over time. Order book analysis can reveal rapid and unpredictable changes in prices, which can pose a risk to traders. Volatility can be caused by psychological events or other factors that have resulted in supply and demand in the market. Lack of availability is also an important risk mentioned in the chapter. Liquidity is the ability to buy or sell a financial asset without significantly affecting its price. In markets with low liquidity, it can be more difficult to execute orders quickly and get prices consistent. This can result in challenges in executing trading strategies. The impact of large orders on the market is another exploitative risk factor. Large buy or sell orders can significantly affect the supply and demand of a financial asset, leading to sharp price movements. Order book analysis can reveal the presence of these large orders, allowing traders to better anticipate and manage the impact they may have on the market. In addition to these specific risks, the chapter can also address general risk management considerations, such as the importance of setting stop-loss and loss limits, diversifying the trading book, and performing proper analysis before making trading decisions. In summary, Chapter 6 of the $100 million Order Book identifies the risks associated with trading based on the outstanding information in the order book. He highlights volatility as a risk arising from price changes, lack of liquidity as a challenge in order execution, and the impact of large orders on the market as a factor to be considered. The chapter emphasizes the importance of risk management and may address additional considerations such as stop-loss setting and trading portfolio diversification. Chapter 7, Case Studies. Chapter 7 of the $100 million Order Book features a series of real-world case studies that illustrate the use of the order book in high-value deals. These case studies provide clinical reviews of successful strategies and highlight lessons learned from past companies. The chapter begins by presenting the importance of case studies as a practical way of understanding how the order book is applied in real situations. He points out that analyzing these cases can provide valuable insights into effective strategies and the challenges faced by negotiators. Each case study presented in the chapter addresses a specific situation where the order book played a crucial role at work. They may involve high-value transactions such as mergers and acquisitions, complex derivatives deals, or trading in volatile markets. Each case study analyzed the adopted strategy, highlighting the key factors that led to the success or failure of the business. Readers will have the opportunity to understand how the order book was used to make decisive decisions, identify trading opportunities, and manage risk. In addition, the chapter highlights lessons learned from each case study. These lessons can include insights into the importance of careful order book analysis, the need to adapt strategies to changing market conditions, effective risk management, and the importance of accurate and timely order execution. Case studies can involve companies from different industries and geographic regions, offering a variety of perspectives and scenarios. They can also include examples of well-known and successful companies, as well as business cases that did not have the expected result, providing a comprehensive view of the different results that can occur when using the order book. In summary, Chapter 7 of the $100 million order book features a series of real-world case studies that exemplify the use of the order book in high-value deals. Case studies analyze successful strategies, highlight lessons learned, and offer valuable insights into the practical application of the order book in real situations. These cases span a variety of industries and provide readers with a deeper understanding of the best practices and challenges associated with using the order book in high-value deals. Chapter 8, Conclusion. Chapter 8 of the $100 million order book is a recap of key concepts discussed throughout the book and emphasizes the importance of the order book as a valuable tool for financial market participants. It also offers insights into the final evolution of the market and possible future trends. The chapter begins by recalling the key concepts included in the book, such as how orders work, analysis of the order book, negotiation strategies, associated risks, and the case studies presented. This recap serves to strengthen readers' understanding of the main themes thought about and their adoration in the context of the financial market. The chapter then underscores the importance of the order book as an essential tool for financial market participants. It highlights how order book analysis can provide valuable insight into market dynamics, help with decision-making, identify profitable opportunities, and manage risk. In addition, the chapter makes final considerations on market developments and possible future trends. This can include insights into technological advances that impact the order book, such as high-frequency trading algorithms and artificial intelligence. It can also address regulatory changes, economic trends, and other factors that influence the financial market. The conclusion of the chapter can emphasize the continued importance of educating and improving the skills of financial market participants with regard to the use of the order book. In addition, it can provide recommendations for further reading, courses, or resources that can help readers deepen their knowledge of the subject. In summary, Chapter 8 of the $100 million order book provides a recap of the key concepts discussed, emphasizing the importance of the order book as a valuable tool in the financial market. It also presents final thoughts on market developments and possible future trends. The conclusion highlights the continuing importance of education and recommends additional resources to deepen readers' knowledge of the subject.